Hi, welcome to the Market Alert for Friday, the 29th of March, D-Day, or would have been D-Day for Brexit. And today we're seeing another vote on May's deal. I think it's half the deal now, to see if she can get that half through. The thing's just becoming confusion upon confusion. Even I've lost the will to live with this one. I don't even know where we're at with it now, but I'm not too concerned. I'm more interested in the impact on the pound. Yesterday, this moved lower as the DUP announced that they wouldn't back May's deal in any way, shape or form. And we see prices moving to the downside. So from this low to this high, you can see the market's just coming back above the 76% retracement. It's still got to get above the 50, but we are above the 200 bar moving average at the moment. But we've been stuck in this sideways move for the last few weeks as we've gone through this debate, and we've actually broken out of this sideways move that we've seen for most of this week as we headed up to the 29th, which of course has been delayed now. So intraday yesterday, we were below the 200 bar moving average. Prices closed below the DP, and then we saw prices moving lower, and they continued lower, and then we had a spike up, and this was purely and simply because of the news from the US, the consumer GDP final figures. It was yesterday, wasn't it? It came out at 2.2, and this had a bit of an impact on the US dollar to start with, and then we saw the Fed come in and buy the dollar, and then we saw the result of the pound moving lower. So this was the DUP, but this was the GDP final figures, 2.2, that sent the market lower there. And overnight, the market sideways, not doing a lot at the moment. Obviously going to be waiting for May's deal later today. The Dow defined a sideways range for this week. It's been an interesting one, but price is now back above the 20 bar moving average. Yesterday they closed above this, heading towards that 25,913 level. Keep an eye on the 26,000 level should this market move higher. Yesterday it was a choppy day, but we've got this pre-market pattern where they keep bringing the market back. You can see yesterday up over 100 points. The market pulled back 50% of this and then continued up to go 150 points from the earlier morning session or pre-market session, and then it became sideways. And this is what's been going on. The futures have been bid higher, and then the markets not followed through in the main session. The objective here is to get prices moving when nobody else is looking, and that's what they achieved yesterday. The market did come down. It was under selling pressure, and this is why they're bidding the market higher in the pre-market session, because they know they're always going to be hit by selling when they get to the opening event. And then eventually prices turned, and guess what? We ended up right back where we started. Surprise, surprise. Not uncommon. Prices moving higher on the overnight there as we break out towards the upside as well. And the market well above the 200 bar moving average at the moment, trying to get above yesterday's close and yesterday's high, where you can see there's some selling that came in when we reached this level. Bit of a resistance level going on at the moment at this level, which is the 25,800 level. So we need to break through this in order to move higher. News today, we've got the current account for the UK. It's supposed to show a reduction. Wait and see if that's the case. And then Brexit vote this evening, according to Forex Factory News there. So yeah, let's see what happens with May's vote this evening. And then finally in Bitcoin, nothing yesterday. Really quiet day for this market, and overnight a bit more activity, but nothing to write home about there. So basically, let's keep an eye on the pound, see what it does today. Probably not a lot until we get the vote, and then the market will be shut anyway shortly after. The Dow, I would imagine, is going to try and do its best to keep moving to the upside, as this is the best thing that they can do at the moment for this market, to keep the illusion alive that everything is fine. when it simply isn't. Is it here? You can see yesterday the reaction. As I said, the dollar was king yesterday as the Fed came to support it, moving it back to the upside, which you'll see here. You see yesterday's move to the upside. And let's just have a look at a weekly chart of this and a monthly, see if we can get a monthly. So you can see what's the dollar's been doing, working its way back. Trump is after a strong dollar, but Mnuchin wants a weaker dollar. But we're not anywhere near the 2000 highs for this market yet. We're about 50% there. And then also very important one here, as I've said about Europe, and what bothers me about Europe is the economy in the Eurozone. And even the IMF and the Bank for International Settlements came out yesterday and warned that the Eurozone emerging markets will be crushed in the next crisis. IMF and BSI warn. And that's because of the fragility of the European Union's economies, even the likes of Germany that are on the cusp of recession. Italy is already in a recession, but you're not seeing any of that reported in the mainstream at the moment. So it makes a change, especially for this woman, to come out and make these sorts of comments. Very rare indeed. I'd say well worth a read. If you get 5 minutes, have a look at it. Very detailed and interesting on what's likely to happen and where the money's going to come from if Europe does start to go down the proverbial black hole of debt further than it currently is at the moment. So yeah, well worth a read. Okay, I'll leave you with that and enjoy your weekend, sunny weekend. Clocks go forward this weekend as well, so we'll revert to normal UK, US trading hours as of Monday. Okay, that will do it from me. Enjoy your weekend. As ever, thanks for watching. See you in the next one.